Hi everybody, and welcome back to FANG Friday. This is Ross Healy, the chairman of Strategic Analysis Corporation and a senior portfolio manager at McNichol & Associates Asset Management. First, as always, thanks to everyone who likes this video and all our subscribers. It helps with the YouTube algorithm and allows us to bring you better content, so thank you for that. Second, I will be appearing on BNN on October the 26th. That's a little way off, but I thought I'd give you a heads up. As we get closer to the day, I'll give you all the details. Third, this is now the reporting season for the FANGs, and we should expect that some of the values that I'm going to be showing you today will change, and at least one could change fairly radically. So it's going to be important for you to stay tuned to FANG Friday for the next 3 or 4 weeks. Finally, just as a reminder, for those who are watching FANG Friday who are not yet SVA clients and are interested in what you see, send us an email and we will get in touch. With that in mind, let's take a look at the FANGs. Well, the first FANG I'm going to review is Apple. And of course, Apple gave us an absolutely perfect sell signal. And then at its HB5, that's 26 times book value, and dropped perfectly to its HB4, that's 20 times book value, and has rebounded. Right now, I'd have to say, looks like a good buy hold to me. The second buy that we like is Nvidia, and Nvidia is a little bit different. The stock actually, as you can see back here in September, was trying to reach its HB5, but got caught in that market setback. Now, it traded a little sloppily around its breakpoint value, the HB4 or 20 times book value, but at no point along the way did we get a confirmed sell signal. So, as we never got a sell, here we are still holding the stock, and given that it's now bounced off its HB4, I definitely would be holding it and would actually even be willing to buy it here. Facebook, okay, again, remember, we had that perfect sell at its bubble price. And you'll remember when I showed you the longer term chart, that was the exact peak of the stock 3 years ago in 2017. Well, the stock dropped all right, but remember last week I was telling you that it looks very, very much to me as if the market technicians got in here before the stock price could actually reach our target, its MSG price, at 5.5 times book value. However, since that time, it's had a bit of a tepid bounce. I still think that this is a stock which could set back and give us a better buy signal than that. Alphabet, well, Alphabet, we had a beautiful sell signal on Alphabet. For anybody who is new to FANG Friday, you'll see, of course, that the stock did not get to its mid-super growth price. That's 5.5 times book value. But when I showed the longer-term chart of the company, we see that there was no ability of the company to actually get that far. It had tried several times. And therefore, when we got the sell on Facebook, we also determined that it would be a very good time to sell Alphabet, and that has turned out very much to be the case. In other words, the market has a memory. History repeats. Well, the company has now kind of circling around its low super growth price. That's 4.5 times book value. I'm not quite sure what to say about this, except that, of course, you know, the American administration has given a signal that it may be about to pump a whole lot more stimulus into the market, and that may give things a kind of not exactly a fresh start, but the impetus to go higher. I would probably take my heart in my hand and buy the stock if it can break out over the super growth price. It's very close to doing that right now. Microsoft, well, Microsoft failed, and in the general setback, it is set back, but it does not appear to be giving any indication that it is going to get back to its HB2 price, which of course was the peak in early this year. Since that time, it's been trading around there quite sloppily, and I don't trust stocks that have sloppy trading. Incidentally, for anybody who is just tuning in to FANG Friday and is looking at this little appendix down here and saying, well, wouldn't you have got a further sell signal there? The answer is yes, we would have. However, what happened was, of course, that we got a perfect buy signal from the Standard & Poor's 500 right on March the 23rd. And of course, the market takes precedence over everything. Okay, the last two stocks that I want to review are Amazon and Netflix, and in both cases, the stocks have come up against their HB4 price. Amazon did try to poke out, but just for a day. It really did try a little bit earlier, and then of course got caught in this recent sell-off. However, since then, has shown a very kind of tepid response to getting back on side. It looked very, very much here in this decline as if the stock wanted to go to its HB3, and we actually got a confirmed sell signal on the stock. I am therefore inclined very much to avoid this stock right now. The last stock that we need to review is Netflix, and it too has had a couple of breakouts and failures. And normally, when I see this kind of sloppy trading, I am somewhat inclined to say I think I would be very cautious. However, with the new burst of stimulus, and actually not so much the new burst of stimulus, although that will help, but more to the point, the possibility that we are going to get a second wave of the COVID-19 pandemic suggests to me that if that is the case, that Netflix is going to be one of the principal beneficiaries of such an unfortunate event. In that case, I can well understand why the stock has come right back up to its HB4, and actually today appears to be sort of trying to break out. So watch that stock carefully, but if we get a COVID rebound, could well turn out to be a good purchase at this point. Overall, things have sort of calmed down a bit, and some of the risk is out of the market in the near term, with the promise of some sort of support package to come. Concern, however, about a possible second COVID wave should be kept in mind. Given its effect on the overall market the first time around, I would not be too dismissive of the possible effects the second time. To summarize this week's action, our two buys, Apple and Nvidia, have certainly found their footing and are not a concern to me at present. Do not be surprised, however, if very soon the Apple breakpoint values and the chart itself looks a bit different than today. Remember that I have told you in the past that Apple has been buying back shares, and if they've continued that practice in the last quarter, then what we're going to see is a dip in those breakpoint values. So stay tuned. They should be reporting fairly soon. Concerning ourselves, a couple of weeks ago, Facebook was heading down nicely to its SVA support, but as I said last week, those market technicians got in the way of a sound buy signal. However, having sold it at its bubble price, that's 7.4 times its book value, I remain in no hurry to get back in. Now, if you are new to FANG Friday and you hold the shares themselves, at this juncture, what do? Well, personally, I would probably keep them. My short-term downside target is the mid-super growth price, which is about 13% below the current price. And I doubt that most viewers should attempt to trade for that percentage gain or loss, as the case may be. Now, Alphabet, after reaching its 10-year valuation extreme and setback, is trying to hang on at its LSG price now. If I was really being aggressive, I would buy the stock here on any kind of a breakout, albeit, as I said, with my heart in my hand. Microsoft continues to struggle to get back to its HP2 price without a lot of success. I referred to the Microsoft chart as sloppy trading. That is to say, not the same precision the way that it used to trade. And I'm concerned that it is trying to tell us something, and maybe something we don't want to hear. Two stocks that failed to hold at their HP4 price, that's 20 times book value, were Amazon and Netflix. Netflix, which has been annoyingly random all year, has recovered to that level again and looks like it's breaking out. So maybe it's trying to offer a buy signal yet again. A COVID-19 rebound might do it. Now, Amazon is heading to the same level again. What saves both of these companies, as our charts show clearly, is the very rapid rate of growth of their balance sheets, which is between about 30 and 40% in both cases. During larger bear market corrections in the past, including earlier this year, this has not saved the stocks from deeper setbacks. But, of course, you have jotted down the general market sell signal level for the NASDAQ 100 that I talked about 2 weeks ago. So you should know what to do, don't you? For now, stick with the market. We've had a bit of a close call, but all continues to be well for the time being. Okay, if what you have seen has interested you and you would like to see what your own stocks are telling you, then send us an email at info@strategicanalysis.ca. As a reminder, clients get lots of benefits, not just access to over 3,000 charts of North American stocks, both American and Canadian, but trade ideas, weekly webinars where we go into the nitty-gritty details of how to use the charts in order to become a better investor. When you sign up, I personally will take you through our system on a one-on-one video conference and show you how you can use it to become a more confident and profitable investor. If this sounds like something you think is in line with your goals, let's take the next step together. Anyway, for now, this has been Ross Healy, the chairman of Strategic Analysis Corporation and a senior portfolio manager at Nickel & Associates, reminding you that nothing, including investing, is difficult if you have the right tools. Have a good week, and I will see you next Friday.